Hey guys, what is going on? Welcome into the video. So in this video, I'm going to be going over 5 stocks that I'm watching and looking to trade this upcoming week, going over the thesis for each trade, the target levels, stop loss levels, and more. And a quick reminder, of course, I'm not an advisor. This is not advice. I'm just going over moves that I'm personally making in the market. Always have your own plan before going in on any trade. Alright, so getting into the first stock that I'm liking a lot right now, that is PayPal stock, ticker symbol PYPL. So I'm sure everybody knows the business of PayPal. This is a large company with a market cap of $227 billion, and this stock is heavily beat down over 35% from recent highs, and has just been on a non-stop fall ever since rumors about PayPal acquiring Pinterest came out. Now that deal ended up not happening, investors were still not happy with how things went, and a recent earnings miss contributed more to this drop. So in their recent earnings, their earnings for this quarter were mostly in line with expectations, with earnings per share coming in at $1.11 versus $1.07 expected, so a slight beat on EPS and a slight miss on revenue of $6.18 billion versus $6.23 billion expected. Now the reason that the stock ended up dropping so much after these earnings was because of the forward guidance. So for the fourth quarter, PayPal sees adjusted earnings of $1.12 per share versus the expectation that analysts have of $1.27, and they have expected revenue between $6.85 and $6.95 billion compared to that analyst estimate of $7.24 billion in revenue. One positive that came out of this earnings call is that PayPal said that it's teaming up with Amazon to let US customers pay with Venmo at checkout, and that is going to be starting in 2022. So that earnings guidance was a big disappointment for PayPal investors, but the thing is, between last quarter's earnings and this quarter's earnings, the stock dropped from $310, and pre-earnings, the stock was sitting at about $225 per share. So in my opinion, that drop from $310 to $225 is plenty priced in for an earnings miss already, but the market's going to do what the market's going to do, and PayPal has dropped another 15% since those earnings came out, currently sitting at a stock price of $193 per share. The stock is now coming into this range of support between $180 and $200 per share, where we saw a lot of consolidation back at around this time in 2020, which is very likely to find some support and bottom out within this previous consolidation range, in my opinion. And PayPal is a stock that historically has never been oversold on the weekly chart until after this week. It's just a stock with a long-term uptrending chart that pullbacks always seem to get bought up. And with high quality companies like this, it's just a no-brainer to buy these large pullbacks, as there's a very good chance that this stock will go on to hit new highs in the future, as long as nothing massively has changed with the business model. And there's also this gap to fill up to 226, 90% of gaps fill. In my opinion, that is an easy first target for a swing trade when it does bottom and reverse back up. So I'm personally watching for this stock to find a bottom between about $180 per share and $195 per share. I'm personally slowly averaging into a position in shares here. Once it does confirm a bottom, I am interested in getting into call options a couple months out or so to play that gap fill back up for a move up to that $226 gap fill target. And in my opinion, this is just a very easy trade to make because of the quality of the business. PayPal is not a company that's going anywhere anytime soon. They have catalysts coming next year of opening a stock trading platform for their US customers. That'd be a huge revenue driver. We've seen the valuations of Robinhood and others. And this is an innovative company as well. They're into crypto and growing that side of the business. The Venmo partnership with Amazon is a great win as well. And in my opinion, this stock is just an easy stock to be averaging in on this huge dip. For a couple months swing trade for this reversal to play out, hitting that gap fill at 226 and potentially a lot higher depending on market conditions and how news is coming out with PayPal. The next stock that I'm liking the opportunity in a lot right now is Taiwan Semiconductor, ticker symbol TSM. This is one of the largest semiconductor companies in the world. Semiconductors have been super hot lately with companies like AMD absolutely taking off, Nvidia, Micron having a nice move lately, Qualcomm having that huge move recently, and it just seems like every company within this sector has been breaking out and taking off recently. Now TSM is the laggard in this group. It's been consolidating in this range about between $110 and $125 for the better part of the past year. And seeing consolidation like this, the longer that the stocks consolidate, the larger the move will be when it breaks that range of consolidation and can result in just that huge breakout move and see a next leg up for companies like TSM. The weekly chart is a great visual for this bull flag forming and is setting up to break that top of the range. So personally, I'm watching for it to break and hold above $125 per share to get in this trade to play the breakout. It has a small resistance level at 127.5. A break above that level sends this one up to the $133 gap, and then has upside after that to hit highs at 142. I would not be surprised one bit if the stock went to make new highs at $150 plus. But this is a great looking risk reward trade. Like I was saying, personally, I'm looking for an entry once it does break and hold above 125 and break out of this consolidation. If I enter it above 125, my new stop loss would be if it dropped back below 125, and first target level being 133, second target level being those highs at 142, and then would look to let some of my position ride if it was to break above new highs and just see where it goes from there. But this has been the sector laggard for this past year. If it can break this consolidation, it could see that breakout move like these other semiconductor plays have seen recently. So the next stock that I'm watching right now is Disney stock, ticker symbol DIS. This is another company that needs no introduction, very long-term uptrending chart, and high-quality business. The stock is down about 24% from highs, fueled by a recent earnings miss. So their EPS came in at 37 cents versus 51 cents expected, and the revenue came in at $18.53 billion versus $18.79 billion expected. So they did have a double miss on earnings. The most important thing is, though, that their long-term growth targets are intact and their long-term guidance has not changed. The CEO reiterated the company's goal of reaching 230 to 260 million Disney Plus subscribers by 2024, and they're also expected to start ramping up content for Disney Plus in the fourth quarter of 2022. The CEO said that Q4 will be the first time in Disney Plus history that we plan to release original content throughout the quarter from Disney, Marvel, Star Wars, Pixar, and Nat Geo all in one quarter. So earnings missed expectations, but the guidance and the long-term targets of this company has not changed, which in my opinion results in this dip as a great opportunity to get in, whether you're swing trading this for a reversal or whether you're a long-term investor. And there's also been recent headwinds and fear of COVID cases picking back up. So in the US, we can see the chart starting to curl back up. In states like Michigan, there's been a lot of panic as these case numbers are hitting new highs. And same with a couple international worries such as Germany hitting new highs on COVID case numbers. So we're seeing some panic in travel stocks. Of course, Disney Parks itself is kind of like a travel stock. So that has fueled the recent stock drop as well. But in my opinion, these are just short-term factors which bring up a buying opportunity in this stock. So taking a look at the chart, we can see the large drop that it had recently after those earnings were announced, down from about $175, now sitting at $154 per share. And the next big level that I'm personally watching is $147 and $150. In that range of support, that's what acted as the major resistance throughout 2019 and early 2020. And this would act as very strong support if it was to be tested on this dip. When the stock bottoms out and starts reversing, it has gap fills on the way back up to 174 and 183, which are my personal targets for this swing trade. And looking for this one to bottom in that 147 to 150 range if it does get there. And if you want to play it safe on this trade, a great place to have a stop loss would be if it dropped below that $147 support. And just zooming out to the long-term chart, Disney, the quality of the business and the quality of the brand, every single dip in the past has gotten bought up very quickly, everything except for that COVID crash. And with long-term uptrending charts like this, the heavy majority of the time, substantial 20% plus pullbacks equal a buying opportunity. For the next two stocks we're going to take a look at, we're just going to take a quick look at the technical setup and go through what my plan is on each trade that I'm watching these stocks on. So the first stock is Draftkings, ticker symbol DKNG. This is of course one of the online leaders in sports gambling. And taking a look at the setup on this one, this is a heavily beat down stock. Just a couple months ago, the stock was sitting at $65 per share and currently sitting at $36 per share. Stock price almost being cut in half. And Draftkings is no stranger to this volatility. Multiple times in the past, it's hit $60 plus before having a 30% plus drawdown. And taking a look at the chart, each time that it's done that has resulted in a buying opportunity and a big bounce back. Last year in the same time period in November, we saw the stock do the exact same thing that it's doing now. Hit a high near $65, pulled back to $35, that level of support, before reversing and going on to hit new highs. Now, I'm not saying that this stock is going to reverse and hit new highs after this drop, but it has done the same thing, hitting 65, nearing that $35 level of strong support. And if it can hold that $35 level of support, you can see a very nice reversal from here. And my personal first target, as long as it holds 35, I'll be looking to get in. I'm not in this trade currently. I want to see this stock confirm this support before getting in. But as long as it holds 35, I'd be looking for a bounce for a first target of $40 per share, with higher targets being around that $45 to $50 level. And if I was to enter this trade, I have a tight stop loss below 35. If it was to break below that support, and my next entry target would be that next support at $30 per share. Okay, so getting into the next one. This stock is in the sports gambling sector as well, along with Draftkings, and this is Penn National Gaming, ticker symbol PENN. I'm not getting into all the things that have happened recently with this stock to result in this large drop. You can look up Dave Portnoy, Penn Gaming, if you want some more info on what's been going on and form your own opinion on that. I'm not going to get into that right now, but there has been a lot of short-term fear and panic selling, resulting in this stock being down over 35% in just the past month. Now right now, this stock is sitting at that strong support at $52, which was tested multiple times back in 2020 and held as that strong support level, is now testing that level once again. So I'm personally watching this stock to hold above 50 to 52. Want to see a strong bounce off that level before getting in for this for a trade for a reversal play to around the $60 level as the first target on this reversal. But this is just more of a watch list play for me as of right now. It has formed this head and shoulders pattern, which is a very bearish pattern, and would likely see its next leg down if it was to drop below that $52 level of support. And if it was to break down from this pattern, my next entry would be at $40 per share, which should be a very strong level as well. And I would be looking for that stock to bottom off that $40 price. This is a stock that could certainly be played both ways. If it bounces off 52, it could play that nice bounce back to around that 60 to 65 level. And if it was to break below $50, it could be a play that you short or buy put options on for that head and shoulders breakdown pattern and target $40 on the downside, and then potentially switch sides on the stock, going from short to long at $40 if that was to play out in that sense. But Draftkings and Penn are just watch list candidates for me right now. I want to see some bounce strength before getting in, but I do think they will bring up great opportunities very, very soon. So those are 5 stocks that I'm watching and looking to trade this upcoming week. Let me know your thoughts in the comments down below, whether you agree or disagree. Make sure to like and subscribe as well if I did provide some value to you, and I would greatly appreciate that. Also, if you're interested in joining the private Discord chat, that's the first link down in the description. You get buy and sell alerts anytime I make moves in the market. I answer any questions you have. You have full access to my short-term and long-term portfolios, and you get a watch list with trading ideas every single night that the market's open. So that's the first link down in the description. And thanks for watching, guys. I'll catch you next time. Peace.